I'm about to show you a highly profitable trading strategy you can use with your favorite cryptocurrency. We're about to break it down in a simple and easy method using 2 simple steps. Welcome in. If you're new, hit that subscribe button. Let's jump into the strategy. This strategy involves the legendary Gaussian channel. Before we get to the strategy, we have to understand what the Gaussian channel is and why it's important. The Gaussian channel is comprised of 2 components. We have a green component and we have a red component. The green is obviously signaling good and the red is obviously signaling bad. Now, once we understand that there are 2 distinct colors of the Gaussian channel, we have to understand the 3 components of the Gaussian channel. We have the top of the channel, which is here. We have the bottom of the channel, which is here. And then we have our median line. Now, our median line is right in the center of the top and the bottom. It runs through the green channel and through the red channel. As you zoom out and you look at the chart, you understand that some of the price action goes above this Gaussian channel and some of it goes below. The Gaussian channel is kind of like the median of the price action. And the Gaussian channel changes colors and does specific things that we can use to pair a strategy with this legendary Gaussian channel. Now, what you will say first is, okay, when we change to red, that's probably a good time to sell, right? And then when we change to green, it's probably a good time to buy. But this is not true. If we would have sold here and bought up here, we would be looking like fools. So how can we use this Gaussian channel to trade? Is it as simple as when we are in red and when we switch to green, we buy? Well, if we bought up here and price actually went only up a little bit, and then when it switched to red, it went down to here, that would also not work. So what type of strategy should we use? In order to make accurate strategy, one that you can use for any cryptocurrency, we're going to need the help of something else. And we've introduced here, the stochastic RSI. The stochastic RSI is our momentum. When we combine our momentum with the legendary Gaussian channel in the specific colors, that is when we have a unique, distinct strategy that's highly profitable that you can use with any of your favorite cryptocurrencies. Now, here's how it works. What you want to do is, for step 1, you want to turn from green to red. As soon as we turn from green to red, the red tells us it's time to buy. But that's only step number 1. What we need to complete this trade is step number 2, and you need both of them to be yes. So the first question, if you want to buy, we have to have switched from green to red, and right here we did. So we have check mark number 1. We switched from green to red. Check mark number 2 is we have to wait for a stochastic RSI cross up, and we had it here. So once we have the stochastic RSI cross up and we had already switched from green to red, at that point we can buy, right? So you buy with those 2 simple steps. Yes, we changed from red. Yes, we had a cross up. Now, the exact opposite is true for when to sell. When to sell, we need to switch from red to green, and we need a stochastic RSI cross down. We need both of those to be yes, and then we can sell. So we would have taken a position right here. We would have waited. We changed from red to green here. That told us, hey, we're just about ready to sell. And then we had a stochastic RSI cross down, we would have sold right here, locking in some substantial profits. And then the whole thing would repeat again. We switched from red to green here, and once we switched to green, we're like, okay, we are waiting for that opportunity to come. And as soon as we switched to red here, then we say, okay, we are waiting to buy. That switch from green to red is that waiting to buy. but we did not have a stochastic RSI cross up yet. So luckily, we would have saved a lot of money waiting for that stochastic RSI cross because prices did plummet. And luckily for us, we would have not entered our position yet because we're disciplined. We have two simple rules. No matter if you're 5 years old or you're 105 years old, you'll be able to follow these rules. And as soon as we switch to red, we say, okay, that's checkmark 1. We're waiting for checkmark number 2. And we have that stochastic RSI cross up right here. So we would have entered our position here. Then the market starts moving up. We're very excited because we just entered our position and now we're waiting for our sell. We wait for our sell. We change from red to green here, right around the price of here, but we have not had a stochastic RSI cross down. So we have checkmark number 1 with a yes. We are waiting for checkmark number 2 and we have our stochastic RSI cross down here. We would have exited our position here and we would have taken substantial profits. So no matter what time frame you're looking at, right now we're on the daily chart, okay? The daily chart is going to have some false signals. You can take this exact strategy and put it on the 2-day or the 3-day or the 4-day, and each progression upwards will have less and less false signals and less risk. You can do the exact opposite and take this strategy we use on the daily and go to the 12-hour, and you're going to have more risk and more potential for false signals. But again, it's up to you with your risk tolerance. Now, I want to talk to you about the pros and the cons of using the Gaussian channel. There are a few pros, there are a few cons. I personally absolutely love the Gaussian channel, and for me, the pros first and foremost is deciphering volatility. It's so hard to decipher volatility in markets, and the Gaussian channel helps tremendously there. The second thing is look for inflection points in the market, turning points in the market, going from a big, strong bear market to a strong bull market. Those inflection points, people will give their arm and leg to figure it out, and the Gaussian channel helps tremendously there. The third thing for the pro of using the Gaussian channel is that it can be used in a trending market or a range-bound market. Now, simply put, a lot of markets are range-bound, where things are boring and they move sideways. Most indicators you can only use in a range-bound market. The second kind of market is a trending market, when price is either going up by a lot or down by a lot. Usually, you have to use a certain indicator in a trending market and a different indicator in a range-bound market. With the Gaussian channel, you can use it in both. The markets that are going boring sideways for a long time, or the markets that are absolutely going to the moon or plummeting in prices. The Gaussian channel will help with all of the above. With the top line as resistance, you can see that this is a resistance zone. So the top of the channel, the middle of the channel, the bottom of the channel, they all act as support and resistance, which tells us a lot of information. You can see, case in point here, we started coming up to this level, resistance. Started coming up here again, resistance. Came up a last time, resistance. That's when the market was very tired. We were already in red. The market had already preached that there are some turmoils coming. We fell all the way down to the bottom here and held support, the bottom here and held support, and then the bottom here and held support. We had held support through that whole period while holding resistance at the top of the channel. This is a major clue, because at that moment we broke this bottom level of support, holding it as resistance with the body of a candle. This spelled turmoil for us. Now, these are some clues. These are some tricks and tips and techniques that you can utilize with the Gaussian channel to greatly outperform the market. Now, let's get to the cons. The cons of using the Gaussian channel: for one, it's a lagging indicator. So by design, every indicator in the world is a lagging indicator. This one, the color, the support, the resistance, the green, the red, all of this is based on the past price action, which again is a bad thing. But again, all indicators are based on past price action. If you know how to use them correctly and use them wisely, you can make tremendous amount of profits, alleviate tremendous amounts of stress, and have a beautiful time. What I suggest, if you're relatively new to trading, is you stick with this daily time frame, you master the daily time frame, and then you understand where your personality is. If you want more risk, you go down in the time frames. If you want less risk and less false signals, you move up in the time frames, and then you can adjust from there. But that is the strategy that will give you highly profitable trades very consistently, without the stress, without the agony. Share this video in chat groups. Share this video with one person that you know it's going to help. Cryptocurrency is a volatile market. This is not financial advice. I'm not your financial advisor, but this information will help you substantially. Hit that subscribe button. Check out our website, cryptocareeruniversity.com, and I'll see you right back here in the next video. Do you want less stress and more success in crypto? Click this video right now.